Welcome students to part 1 of our lecture on accounting for non-trading concern or non-profit organization. So if we talk about an organization, alright, there are two types of organization. The first organizations are organizations where the main objective is to earn profit, or we call them as a profit motive organizations. And the second type of organizations are organizations where their main motive is not to earn profit or a non-profit organization, but instead the profit is to do service towards the society. For example, organizations such as hospitals, all right, educational institutions, right, education institutions, charities, okay, religious institutions, all these institutions, all right, are non-profit organization. Why? Because their main motive is not to earn profit, but instead to do what? To do service to the society. Okay, so coming back to organizations which is for profit motive, all right, their financial statements or their accounts starts from the trial balance. After they have prepared a trial balance, they will be able to prepare what? The trading and profit and loss account in order to know whether they have incurred a loss or whether they are gaining profit. After they have prepared a trading and profit and loss account, they will prepare what is known as the balance sheet. Okay, and after they have prepared the balance sheet, they will prepare a cash flow statement. Okay, as per the Companies Act 2013, all right, there are certain companies which is mandatory for them to prepare what is known as a cash flow statements. All right, and along with this cash flow statements, all the companies will prepare what? Will prepare a cash book or a cash account. Okay, but in case of a non-profit organization, since their main motive is not to earn profit, all right, since their main motive is not to earn profit, so preparation of trading and profit and loss account or cash flow statement is not mandatory for them. Because why? Because they are a non-profit organization. Since they are a non-profit organization, they don't have to prepare a trading profit and loss account. Okay, but just because they are not preparing any traded profit and loss account or a cash flow statement, it does not mean that they should not keep a record of their incomes and expenses. Because even if they are a non-profit organization, they will have transactions such as incomes and expenses. Yes or no? So all these income and expenses needs to be recorded even though they are a non-profit organization, right? So where will they record all their incomes and expenses or all their receipts and payments? Right? They will record it in the receipt and payment account and in the income and expenditure account. So what the non-profit organization will do is they will prepare a trial balance. From the trial balance, they will prepare a receipt and payment account. And from the receipt and payment account, they will prepare the income and expenditure account. And from the income and expenditure account, they will be able to prepare the balance sheet of the non-profit organization. Clear? Why do they have to prepare this? So that they will keep a record of all their incomes and of all their incomes and expenses, and also to avoid misapportionment or any embezzlement of funds of their funds. Yeah, in order to avoid any misapportionment or any embezzlement of their funds, they will have to prepare the receipt and payment account and the income and expenditure account. Yeah. Now let us talk first about the receipt and payment account. Okay. Receipt and payment account is merely a summary of cash book. Like I've said earlier that companies, they have to prepare cash book or what? Or a cash account. And for some companies which have been made mandatory by the Companies Act 2013, they will have to prepare a cash flow statement, right? But for a non-profit organization, they have to prepare a receipt and payment account instead of what? Instead of a cash book or a cash account. Okay, for non-profit organization, instead of them preparing a cash book, cash account, they will prepare a receipt and payment account. It is said to be synonymous to cash book. All right, it records only cash transactions. Only the cash transactions are recorded in the receipt and payment account. Any non-cash transactions will not be recorded in the receipt and payment account. It got two sides. Since it is an account, it has two sides. Okay, one is the debit side and the other is the credit side. Okay, the left hand side shows receipts. In the debit side, it will show receipts, and the right hand side shows payments. Okay, actual cash received is posted at the debit side and actual cash paid is recorded at the credit side. Actual cash receipts is recorded in debit side and actual cash payment will be recorded in the credit side. This account starts with the opening balance of cash and ends as showing the closing balance of cash. The receipt and payment account starts with opening balance of cash to balance brought down. Okay, cash in hand or cash at bank, right? And ends with the closing balance of cash. All right, by balance carried down, cash in hand or cash at bank. Clear? Okay. What are the special features? What are the special features of receipt and payment accounts? Let us understand one by one. All right. Number first, receipt and payment account is a real account. All right. The receipt and payment account, it's a real account. What is the golden rule of a real account? Debit what comes in and credit what goes out, right? So receipt and payment account is a real account. Whenever cash is received, it is debited, and cash payment is credited. Okay, if cash is received, it is debited to the receipt and payment account, and during cash payments, it is credited to the receipt and payment account. It is opened by showing the opening balance of cash as first item on the debit side of the account. Okay, the receipt and payment account is opened by showing an opening balance of cash as the first item on the debit side of the account, and closed by showing the closing balance of cash as the last item on the credit side of the account. Clear? It records all cash receipts and cash payments, whether it is capital or revenue in nature. All cash receipts or cash payments, whether capital or revenue in nature, is recorded in the receipt and payment account. For example, what is capital expenses? For example, what is capital expenses? Any expenses which is incurred by the organization for procurement of fixed assets such as land, building, plant, machinery, and so on and so forth. Such expenses are known as capital expenses. Alright? And any expenses which is used not to procure fixed assets, okay, but which is used for other purposes such as payment of salaries, wages, and so on and so forth, such expenses are known as revenue expenses. Clear? So all cash receipts or payments, whether it is capital in nature or whether it is revenue in nature, will be recorded in the recipient payment account. Clear? All cash receipts or payments, whether belonging to the current or previous year or next year, is recorded in the what? Recipient payment account. Okay, fine. Any cash payments or receipt, whether it belongs to any year, whether it belongs to the current year or whether it belongs to the previous year or whether it belongs to the subsequent year, all right, will be recorded in the receipt and payment account. If the receipt and payment is occurring, if the receipt and payment is occurring in the current year, suppose 2019 is your what? Previous year. 2020 is your current year, and 2021 is your subsequent year. Okay? Okay? So what happened is, if the receipt and payment belonging to the current year and paid in the current year will be recorded in the current year. Alright? If the receipt or payment which is occurring in the previous year but it is paid in the current year, alright, will be recorded in the current year. Likewise, if the receipt or payments which belong to the subsequent year but it is paid in the current year will be recorded in the current year. Clear? So any receipt or payment belonging to the current year, to the previous year or to the subsequent year will be recorded in the recipient payment account. Alright, this account does not show net income or losses. Since receipt and payment account, it is prepared in lieu of a cash book. Okay, alright, which shows the cash receipt or cash payments of the non-profit organization. So net income or losses will not be shown. Alright, no adjustment is made on this account. Any kind of adjustment is not made in the recipient payment account. We cannot prepare balance sheet on the basis of this account. Since the recipient payment account is prepared, right, in lieu of the cash book or cash payment account, right, hence balance sheet cannot be prepared from the receipt and payment account. Clear? Clear? If the total credit side is more than the debit side, the balancing figure will appear on the debit side. It will be represented as a bank overdraft. For example, this is your receipt and payment account. Okay, this is the debit side, this is your credit side. Alright, the debit side records only the receipts and the credit side records your expenses or payments. Okay, if the credit side is more than the debit side, alright, then the balancing figure or the closing balance will be on the debit side as what? To balance carried down as what? As bank overdraft. Clear? It will be recorded in the debit side, but as what? As bank overdraft. Clear? So these are the special features of receipts and payments account. Alright, this is the format for the receipt and payment account. If you want to prepare receipt payment account, you must know this format. Okay, on the debit side it records the receipts, and on the credit side it records the payments. Why? Since this is a real account. Clear? So it is opened by showing the opening balance of cash in hand or cash at bank, and it is closed by showing the closing balance of cash in hand or cash at bank. If the payment side is more than the receipt side, then the receipt and payment account, it is closed, all right, by showing the balancing figure in the debit side as what? As bank overdraft. Clear? Fine. All right. Now, let's say 2019, you've prepared what is known as a receipt and payment account. Okay. Credit, debit. Let's say in 2019, the debit side is lesser than the credit side, or we can say the credit side is more than the debit side. Then the balancing figure or the closing balance will be on the debit side as what? To balance carried down as what? As bank overdraft. This closing balance, all right, of receipt and payment of the receipt and payment account of 2019 will be the opening balance of the receipt and payment account of the 2020. Let's say this format is of 2020. Clear? So we have to open by showing the opening balance in the credit side as bank overdraft itself. Clear? So this is the format of your receipt and payment account. All right, let us discuss about the income and expenditure account. What is an income and expenditure account? It is a summary of income and expenditure of the current year. All right, any income or expenditure of the current year will be recorded in the income and expenditure account of the non-profit organization. It is just like a profit and loss account, and it is also prepared just like a profit and loss account. Okay, what are the special features of income and expenditure account? Number one, it is a nominal account. The receipt and payment account is the real account, but the income and expenditure account, it is a nominal account. What is the golden rules for nominal account? Debit all expenses and losses, and credit all incomes and gains. Okay, expenditure is recorded at the debit side and income is posted at the credit side of the account. If this is your income and expenditure account, credit, debit, income and expenditure account, okay, then all the expenditure will be recorded in the debit side and all the incomes will be recorded on the credit side of the income and expenditure account. It records only revenue, receipts or expenditure. Capital expenditure or incomes are not recorded in it. Okay, only the revenue, receipts or expenditure, or only the revenue, expenditure or incomes will be recorded in the income and expenditure account. Only what? Only the revenue, expenditure or revenue, income will be recorded, all right, in the what? Income and expenditure account. Next, expenditure of revenue in nature relating to the current year only are recorded in this account. Okay, any expenditure which is what? Which is revenue in nature and which belongs only to the current year itself will be what? Will be recorded in the income and expenditure account. Clear? Likewise, revenue receipts, any receipts, okay, which is revenue in nature and which belongs only to the current year will also be recorded in the income and expenditure account. Clear? Income and expenditure are recorded on accrual basis of accounting. It means that income or expenditure are recorded when transaction occurs rather than when payment is received or made. It means that all the incomes and expenses or all the expenditure or income transactions are recorded as and when they occur, not as and when they are paid or received. Excess of income over expenditure is known as surplus. If this is your income, this will be credit, this will be your debit. If this is your income expenditure account, income and expenditure account, debit side will be your incomes, credit side will be your expenditure. Okay, if income is more than your expenditure, all right, then it will show as a surplus. If the income is more than the expenditure, then the balancing figure will be surplus. All right, if expenditure side exceeds the income side, the excess is supposed to be deficit. But if income is less than the expenditure, then it will show as deficit. Okay, if income is less than the expenditure, it will show as deficit in the credit side of the income and expenditure account. Balance sheet can be prepared on the basis of these accounts. Since the income and expenditure account, it is prepared in lieu of the profit and loss account. Therefore, balance sheet for the non-profit organization can be prepared on the basis of this account. Clear? Okay, this is your income and expenditure account format. Okay, the expenditure will be on the debit side and the income will be on the credit side of your income and expenditure account. If the expenditure is more than the income, then the balancing figure will be deficit. If the income is more than the expenditure, then the balancing figure will be surplus. Clear? Okay? Alright. Now, let us discuss in detail the difference between receipt and payment account and income and expenditure account. Basis. Number 1, purpose. The receipt and payment account is prepared to know the cash receipts and cash payments. Alright, in order for the non-profit organization to know how much is the cash receipts and how much is the cash payments, they will need to prepare the receipt and payment account. But in case of income and expenditure account, it is prepared to know whether there is an excess of income over expenditure known as surplus or an excess of expenditure over income known as deficit during the current period. Clear? Nature of account. The receipt and payment account is a real account. Alright? It is a summary of cash account. Cash receipts are recorded on the debit side and cash payments are recorded on the credit side. But in case of income and expenditure account, it is a nominal account. It is similar to profit and loss account. Expenses are recorded on the debit side and incomes are recorded on the credit side. Okay? Basis of counting. The receipt and payment account is based on the cash system of accounting. What does this mean? Only the cash transactions are recorded. The non-cash items or the non-cash transactions are not recorded in the receipt and payment account. Clear? But in the case of income and expenditure account, it is based on accrual system of accounting. Okay? Which means even the non-cash items like outstanding expenses, depreciation, and so on and so forth are also recorded in the income and expenditure account. Clear? Number 4, opening and closing balance. In the receipt and payment account, it is opened by showing an opening balance of cash and banks and ends with the closing balance of cash and bank. Alright, but in the case of income and expenditure account, there is no opening balance. Alright, in the end, it is closed by showing the surplus or deficit. If the income is more than the expenditure, then surplus will be shown. And if the expenditure is more than the income, then deficit will be shown in the income and expenditure account. Nature of items. It contains actual receipts and payments irrespective of revenue or capital items in nature. Alright, in the receipt and payment account, alright, the actual cash receipts or cash payments, alright, whether they are revenue in nature or whether they are capital in nature, will be recorded in the receipt and payment account. But in the case of income and expenditure account, only the revenue items, only the revenue expenditure or revenue incomes, alright, will be shown, okay, will be shown in the income and expenditure account. Period. All cash receipts and payments made during the year pertaining to the past period, current period, and subsequent period is recorded. All cash receipt or all cash payments, whether it is of the current year or of the preceding year or of the subsequent year, will be recorded in the receipt and payment account. Fine. But in the case of income and expenditure account, alright, only the revenue items relating to the current period only. Alright, all the revenue items, whether it is income or expenditure, which is related to the current year only or the current period only, will be recorded in the income and expenditure account. So these are the differences between receipts and payment account and income and expenditure account. Okay, so we have come to the end of our part 1 of our lecture on accounting for non-trading concern or non-profit organization. We will continue in the next lecture. Thank you so much.